Welcome to the Real Estate Deep Dive with Paul D. Garrison from JP and Associate Realtors. Today we're going to be taking a quick look at the housing market as of January 2022. So let's start out with interest rates. Let's talk a little bit about where we've been, where experts are saying that we're going. So for a while we've been talking about experts predicting that rates are going to increase in 2022, but then we see this quote from Sam Keterer that mortgage rates have effectively been moving sideways despite increases in new COVID cases. Now, I'm not saying that things are changing and that we aren't expecting rates to rise, because they still are. But I do want to give you some perspective on what he's saying. This is because incoming economic data suggests that the economy remains on firm ground, particularly in cyclical industries like manufacturing and housing. Moreover, low interest rates and high asset valuations continue to drive consumer spending. While we do expect rates to rise, there's that key point there. The push of the first-time homebuyer demographic that has been propelling the purchase market will continue in 2022 and beyond. So here's what that looks like graphically. The sideways movement has been happening since around September 30th, where rates have been hovering around just over 3%. Still a very good rate for financing a home. Now, almost all the experts are still predicting that we're going to see rising rates in 2022. You can see in this chart there are different predictions across the different quarters. While no one has a crystal ball, when this many experts are predicting a rise in rates, there's a pretty good chance of it occurring. If we look at the average of the predictions, that puts the rate somewhere between 3.5% to 4% by the end of the year. So the key takeaway here is, while rates seem to be moving sideways right now, long term they're predicting that rates are going to continue to go up as the economy continues to improve. So how does that impact house prices? Well, Odeda Kushi says house pricing and existing home sales have historically been resilient to rising mortgage rates. We've touched on this in more depth in a previous deep dive, but to put it simply, any talk about rising interest rates are going to cause the housing market to shut down just isn't based in any historical fact. As Odeda points out, both home prices and sales have actually fared quite well historically when interest rates have risen. So let's take a look at the next topic, forbearance. Forbearance has finally fallen below 1 million active forbearance cases. So you can see here, as of December, 890,000 active mortgages were in forbearance. That represents about 1.6% of the active mortgages that are out there. So this wave of foreclosures from all the people in forbearance simply isn't happening. There are just too many options that are open to them given the increase in home equity that we've seen over the last year. So if your plan on buying is waiting to see this wave of foreclosures, you may want to look at picking a better plan. So what's happening with the people coming out of forbearance? Well, they were reporting this data weekly, but recently have shifted to reporting it monthly because it's just really not that big of a deal going into the new year. So the most recent data we have is as of November 30th, 2021. So in that, we see everyone that has exited forbearance since June of 2020. And 38.6% of them have paid their mortgage in full, while 44% have gone through some sort of workout plan or repayment plan. And 17.4% were still in trouble in that they haven't worked out a repayment plan or some kind of loss mitigation plan. It's important to note that only 0.6% have ended in either a short sale or deed in lieu. So this quote from CoreLogic sums it up very well. We may see a little bit of an uptick in foreclosure rates in 2022, just an uptick though, from an extraordinary low level. We're not expecting to see big increases. We're expecting delinquency rates overall on home mortgages to actually continue to remain quite low. Let's talk a little bit about supply and demand. ShowingTime, a company that helps book home showings for most of the US, has just released its year-over-year demand numbers. Impressive year-over-year demand was up quite a bit across the country. Michael Lane, the president for ShowingTime, said showings traditionally lag during the holiday season, but the data we're seeing tells us that buyer demand remains strong. Coming into the new year, buyer demand has remained strong, and many of the experts are predicting that will continue well into this next year. Now, I usually try to keep the numbers and metrics I report on at a national level, but I think it's important to take a look at our local numbers in this case. Here's the average numbers of showings per listing by our 4 major counties in the DFW Metroplex. Note that Collin County has seen a much higher number of showings compared to the other counties, with Denton County being a not-so-close second. This is a sign of the impact COVID and the ability to work from home has had on our markets. Now, all four counties have seen a drop in supply or inventory over the past few months. Here's a graphic of the average percent of the original list price that homes sold for broken out by county. Note back in 2020, you can see more normal percentages being 3 to 4% below 100. You can also see that as the market heated up, those averages rose above 100% as homes started selling for well over asking prices. Now, this is the average percent, so it's important to mention that there are obviously homes that are selling for less than this, or some homes that are selling for more than this, but the graphic gives you insight into an interesting trend. Note that Dallas County's average has dropped below 100% for a while now. This is due in part to the lower demand we saw reflected in the number of showings per listing. So let's go back to the national numbers with this graphic. It comes from NAR's most recent year ahead forecast. It comes from about 24 different sources across the industry. It's predicting a mean increase of 5.7% in home prices. Now, I will note that we're seeing more and more forecasters starting to kind of lean towards the heavier side in their forecasts. I wouldn't say as large of a price increases as what we saw in the last year, but we're still seeing them lean a little bit more towards larger pricing increases for 2022 as well. So what are some of the other predictions from the experts? Well, Odeda Cushy says increasing house price appreciation may encourage existing homeowners to use that equity to purchase a larger and more attractive home. A dynamic known as the wealth effect of rising equity, which is already happening to some extent. Considering the national average of $56,700 in gained equity, are you one of the people that's considering upgrading their home? If so, please give me a call and we can discuss your options. I'm going to close out this market update with a quote from CoreLogic where they're predicting another strong year for housing and the likelihood that we'll reach a 16-year high in 2022. Many of the metrics and numbers in this presentation are based off of the national real estate market. However, local areas can vary. Please give me a call and we can discuss your situation. Have questions about your specific needs or location? Please contact me at 214-683-8188 or paul@pauldgarrison.com. Want more information about the housing market and related issues? Be sure and check out my blog at www.pauldgarrison.com. Thank you for your time. Please take a moment to visit our website at www.pauldgarrison.com.